Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, let's get into the charts. We have some very interesting happenings today. Market overall is just on the flat line, but I think the key here is to recognize the multiple small bearish signals coming out. First off, you had to note yesterday's move down into the end of the day. So the markets were floating up into the president's speech, and lo and behold, we saw the markets coming off those highs. We still closed neutral to positive yesterday, but it was not by any means a resounding up day. Even I think the Nasdaq was down yesterday overall, even though the Dow and the S&P were higher. Then today, following the speech, generally with this type of light volume, you would get an up day in the markets, or at least a neutral to positive day. And lo and behold, the markets gapped up, looking like we were going to get that up day, and then they started to fade again. And then notice the downward move here and the sideways consolidation. This is a classic in spirit of bearish pattern. Again, the sharp drop, the nice beautiful angle sideways, and notice the rollover we've seen now in the afternoon session. The market is almost hitting that 2:30 time frame, and the spider's now down 1 penny on the day. Now, the key here is to recognize other patterns out there. You have a head and shoulders pattern on the intraday SPY here, stretching to yesterday. It's very, very clear. Up, down, that's your left shoulder. Here's your head, and here is your right shoulder. That is your head and shoulders pattern. If it breaks this neckline on a closing basis, that's where it triggers. All right, should that happen, you would be looking for a downward move on the SPY down to the 200 as first target. And then if it breaks that, you will see this market go all the way down to official target on the SPY, which would be 151. That would also be a major gap fill. All right, so again, you're just really watching the SPY to see if this neckline gets breached. As long as you're trading above it, technically this head and shoulders pattern is not in play. Most amateur and retail investors do not understand that. It must break the neckline on a closing basis to trigger. Once it does, then you look for target. As far as it is now, they could float this thing right back up. So I guess I just want everyone to be crystal clear on how to utilize a head and shoulder pattern and what it means when it means it. Okay, so that's what we have going on the intraday chart. Beautiful bearish patterns, interesting rollover action. Again, I think it's important for us to note that the market on 2 days on either side, 1 day on either side of the presidential State of the Union address, with the volume we've seen, which has been around 60 million, 70 million a day, you would generally expect the market to be pretty good on the upside. That hasn't really happened. You haven't been going down, but the markets haven't been going up. And I think that's important on that type of light volume to recognize, plus these bearish patterns. To me, I've been nailing the market every single day so far. I basically said Monday would be a neutral to down day. That's exactly what it was. Tuesday would be neutral to up. That's what it was. Wednesday, I went into a full-out neutral stance. And guess what the spiders are doing right now? They're trading exactly on the flat line. I think we do have a chance to inch down if you can break the neckline into the end of the day. But either way, just nailing the market every single day based on what I'm seeing. And I'm giving these calls to our research center members every night, guys, and our chat room members. So basically, every night I post a long video to our members, and I give them all my insights, all my trade alerts, and so forth. And again, so far this week has just been fantastic. So we'll see if it continues as I expect it to. The profits will continue to roll in just like they always do. And again, we just do what we do every single day, rinse and repeat. All right, going into a couple other things here, folks. What I want to show you on the daily chart is your upper resistance line got tagged yesterday and today. See this trend line? This stretches all the way back to a pivot high in 2007 that I isolated down for members literally, get this, literally probably about a month to a month and a half ago. I told them this was a major resistance level. I've basically been telling you guys, even on this free video, that you continue to have resistance through the 150 level on the spiders to the 152.40 to 50 level on the spiders. And guess where we are? We're stuck, and we've been stuck in this 150 to 152.40, 50 area now for probably, oh, I don't know, I mean, a week and a half, 2 weeks inside of that level. So it just shows you how important it is to understand the levels on the charts, because it really does give you that major success rate by understanding where stocks, where markets will turn around, where they're going to pivot, and so forth. All right. So that's what we have there. Let's take a look at the dollar chart. The dollar has reversed early losses to go up to the positive side. You're still holding above both of these moving averages. You never filled the gap, but either way, you're still holding up. This means we could eventually trade up as high as this area up here. This would be your resistance next, your next resistance level on the dollar, the UUP chart. If it gets through there, look for the 200 moving average. Okay? Take a look at gold quickly here. Your intraday analysis on gold. Gold getting very, very weak as the dollar has reversed to the upside. That's somewhat expected, though, in all fairness. When you see that type of action, you expect the dollar to move up. Gold should move down. And gold's been weak anyways. I've been talking about it to our members here at InTheMoneyStocks.com inside the research center that gold should eventually continue down here, and that looks to be the case today. You will have a little bit of an area of support right here at this double bottom. You're not quite there yet. My guess is you'll tag that level tomorrow. I don't think it will last very long. I think you'll go through that level. And again, next move down, you're going to go right to this little pivot here, which is a gap fill on the GLD. That's 157.32. That will be your next major level on the GLD. SLV is under pressure as well, but again, as you can see on the daily chart, still holding the 200 moving average very nicely there. Very nice hold of the 200 still. We'll see if it's able to hang on there. If that ever breaks and confirms below, look for a move all the way down to this area down here. All right, again, that's if you confirm below the 200. By the way, the 200 confirmation technique is a proprietary technique utilized here at InTheMoneyStocks.com. So again, these proprietary techniques really are the way I'm able to make as much money as I am and give these calls out to our members with an 80 to 90% success rate. So I do encourage you to come join us. We'll just continue to find these trade setups and give them to you, throughout the years. We've been doing it for about really 5+ years now for members, and just keeps on growing. Our membership keeps growing. So we encourage you to come join us as we just continue to do this. All right, next up, let's take a look at the USO. USO is down 19 cents, opened higher, but again, same thing. As the dollar gained some traction, as the markets got a little bit weaker, oil has come off those highs. We'll see again if it comes in. Interesting charts out there. JP Morgan, I just wrote an article posted on our free rant and rave blog on JP Morgan Chase. The reason why I wrote this article was, wow, nice little level here at the 200, a good scalping level if it gets there on this candle or the next. But anyways, one thing I wrote about on the article, on the archive, or on the rant and rave blog today, was how JP Morgan was showing weakness today. And JP Morgan is notoriously a leading stock. When this stock was strong, it meant the market over the next few days would be strong. When this stock becomes weak and the market's still neutral to positive like it was yesterday and today, it tells us that the market may be showing some weakness in the future and may be heading down. So be aware of that, folks. I think that's very important to see here as we do see continued weakness in JP Morgan Chase. Also, Apple down $1.55 today. This stock was down much, much more early in the day. Here's your intraday chart. Today, opening lower and pushing down. All of a sudden, a rumor hits and it pops up, moves up, and then again has collapsed back down. Rumors are notoriously released by institutional investors and traders. They're done so that these institutions can get out of these plays and make some money. Please understand that. All right, you should never buy a rumor. Rumors, once the rumor's out, the stock is already up anyways, and you're just chasing, and 9 out of 10 rumors turn out to be fake, and they just come back in. So just keep that in mind. Basically, what you can read by this, every time you have a rumor, we've been seeing more and more rumors on Apple lately, it means there's a couple big institutions stuck in this trade, and they're trying to push it up. And really what that tells me is they're going to have to be flushed out, which means there's another dump on Apple coming to that 420, 400 level. And then once you get there, then I think that's where you start to really accumulate for a longer term long on Apple. All right, so just be aware of that chart as well. Lastly, Caterpillar daily chart I want to show you guys. Possible head and shoulders pattern set up here. And again, you can very easily see it. Look at this head and shoulder pattern coming at the highs of charts, which is awesome. Just like we looked at before, there's your neckline. And again, if you break the neckline, you're going to go right down to the 50 MA. Beautiful little chart setup, head and shoulder pattern on Caterpillar. All right, guys, I'm going to get back to trading here in the intraday stock chat, which is our live chat room, as spiders continue to trade basically flat on the day. We just tagged that neckline on this current candle, on this last candle, and bounced. That means it hasn't triggered yet. Remember, it's got to close below. So they're defending this. They know if this breaks, this thing is going lower very quickly. So the powers that be, the Federal Reserve, the institutions are going to try to defend this. They probably have computer programs set up to defend this, and you just got to know the games. If it breaks, it's gone. Down it goes. We should see downside over the next day or so. If it doesn't break today, then they might be able to keep this market up for another day or so. All right, but I think at this point, based on the market action and how weak it's been on this light volume, you have to think that a small pullback correction is coming in. Just a few percent, I think, to the downside, but completing this head and shoulders at least down to 151, maybe a little bit lower. All right, guys, have a great afternoon, great evening. I will talk to you soon. Come join us here. Take the 7-day free trial at inthemoneystocks.com.